Most amateur investors spend all their energy agonizing over exactly when to buy a stock. But getting in is only half the equation. Mastering exactly when to hit the sell button is what actually locks in your wealth. When prices start to drop, selling feels terrible. Our brains play tricks on us, rationalizing the red numbers as a temporary dip or just a paper loss that will inevitably bounce back. But it's almost as hard to sell when a stock is climbing. We hesitate, terrified of exiting too early and missing out on future gains. Caught between the dread of a loss and the fear of missing out, we often freeze. This emotional paralysis tethers us to declining assets, while more profitable opportunities pass us by. There is a massive cultural pressure online right now to hold on to assets indefinitely. It's constantly celebrated as having diamond hands. The reality is that holding an investment out of sheer stubbornness or emotional attachment will drain your portfolio just as fast as buying into a terrible company. To protect your capital, you need a system that removes those emotions entirely. Pragmatic investors rely on a strict three-part framework to know exactly when it's time to exit. A stock's price is driven by three distinct engines: its fundamental value, its trading value, and its momentum value. This chart tracks long-term growth, representing fundamental value, based on real-world revenue and profit. Then, trading value appears, how the market prices the stock based on short-term supply, demand, and technical patterns. Finally, momentum value, a price surge driven purely by internet hype and emotion. We saw how fragile this is with Lemonade Inc. The stock surged entirely off influencer hype, but once the reality of the business's actual numbers set in, the price collapsed. If you realize an asset in your portfolio is running on momentum rather than fundamentals, the hype always fades. The smart move is to lock in profits by selling a portion before gravity takes over. The second clear reason to sell has nothing to do with the stock itself, but rather what you can do with the cash. You might simply have found a superior use for your capital. If you're relying on your portfolio to fund a major real estate deal or launch a new business, leaving that capital exposed to sudden market drops right before you need it is incredibly risky. Leaving money in the stock market puts your returns entirely in the hands of other CEOs. Pulling it out allows you to actively reinvest that capital into a venture where you control the outcome. Selling in this situation facilitates the strategic redeployment of capital into your own higher-yield personal ventures. The final trigger happens when shifts in technology or the economy change a company's future prospects. During the COVID pandemic, Warren Buffett looked at the travel industry and realized it was facing a structural struggle that would take years to resolve. His original thesis for buying into the sector was broken, so he decisively cut his losses and exited his airline positions entirely. You have to apply the same logic to management. If leadership proves untrustworthy, like Tesco during its accounting scandal, holding the stock becomes a massive liability. Technological obsolescence works the same way. When smartphones became the primary way we consumed information, the underlying value of print newspaper stocks evaporated. When the core fundamentals that convinced you to buy a stock no longer exist, holding on out of loyalty makes zero logical sense. The stock must be sold. Here is the cold, hard truth. The market has no memory, and a stock does not care if you own it. When prices fall, an amateur investor panics. A seasoned investor simply looks at their portfolio and evaluates it against these exact three triggers. We sell when artificial momentum dies. We sell when we have a stronger personal opportunity. And we sell when the fundamental thesis of the business permanently breaks. Relying on this strict system acts as a circuit breaker for your brain. It strips the fear, the hype, and the hesitation entirely out of your portfolio management. Treating the sell button as a mechanical tool for capital protection allows you to multiply your wealth over a lifetime.